We are very excited to introduce our next keynote presentation here at the Planet MicroCap Showcase Vancouver. I'd like to introduce Erik Sloane from the CBOE Canada. Erik, take it away.
Brilliant. Thanks, Bobby. Appreciate it. And thank you all for joining. I'm excited to share with you a few thoughts, ideas. We'll center it around one key word, which has been at the cornerstone of our business, innovation. You look up the definition, I think you'll find a few interesting ones, but maybe one that stands out for me, it's the idea or the thought of doing something different to save some energy. And I think that that's something that all of you as partners to public companies, to investors, as you're looking for opportunities, to management teams of companies yourselves, are all looking for ways to make things more efficient, save time, reinvest back into the business. So from that perspective, we'll approach a bit the presentation discussion today, but maybe a quick show of hands just to start for those folks in the room. Who's actually heard of CBOE before Joe started the party off this morning? All right. Has. Yeah. Okay, good. It does. Not everybody knows about it, but that's the fun bit. We got our business started 50 years ago. We are the world leader in options. So if you're familiar with CBOE, that's the new brand. If you are familiar with CBOE, that would be the old brand. And over time, we have stitched together as innovators ourselves, a pretty impressive global business. We are a public company ourselves, and I'm now forced to put this slide front and center, which has changed my normal deck, but you'll see it, you can pause on it and give it a read. So, CBOE, based in Chicago. Think about innovation and disruption. We only had an options business up until about 10 or 15 years ago. What you may not know is everything that has happened since then, and that is the careful acquisition of a number of different markets in a number of different asset classes to glue together what you see in front of you now. We own, operate, manage 26 different exchanges around the world across options, futures, derivatives, FX, and cash equities. Cash equities is this business, and that's where we'll spend a bit of time chatting today. As Bobby shared, I'm our Chief Revenue Officer for the Canadian business, but our global head of corporate listings. So responsible for what is to follow in this deck and then actually having to do it, much like the management teams we work with every day. So when you look at a few key facts, globally, CBOE turns over $62 billion in notional value every day. That's table stakes, eyes closed, good to go. We have 60 public companies listed on our marketplaces today. The cash equities bit is where we're now fully focused and spending all of our time. In total, 1,900 listings around the world show up on our cash equities markets. That's comprised of ETFs, warrants, debt, Canadian depository receipts, if some of you have been playing around with some of those products in Canada. And very, very proud of those. We are the third largest U.S. equities market by market share worldwide. So when you look at our business and what we're capable of, what we're squarely motivated to do and deliver, centering around our evolution in cash equities. Today, we own stock exchanges in Canada. I think some of you might have come across CBOE Canada, formerly the NEO Exchange, prior to today's presentation. Last June, CBOE acquired the NEO Exchange outright and folded it into the CBOE Canada brand. Lesser known, we also own a U.S. stock exchange. National market, blue sky exempt. We'll share some more detail on that in a moment. So north-south, game on. You see a bunch of other cities on here where we own and operate other markets, but the 5 that we are focused on now, the UK, Amsterdam in the Netherlands for pan-European access, largely a result of Brexit, and Australia. Now, when you think about our ambitions in cash equities markets, for us, we see a pretty incredible opportunity in developed markets to actually bring some really needed improvements to public companies and investors to make their life actually easier to find some of the interesting deals in the world. So when you take a few looks at key stats and just to really hit home a couple key points on capabilities, we are not new in this business. Our US exchange has been operating almost 15 years. US in the top left, we are a single-digit percentage point behind NASDAQ, 1.5 behind NYSE with respect to US cash equities trading. So think about that for a moment. First time you're hearing about our US cash exchange, it's been there for 12 or 13 years. We're only 1% off when it comes to liquidity in the US. What that should tell you as a public company thinking about getting access to US markets, pretty much on an even playing field when it comes to accessing all the global liquidity providers, market makers, and retail investors that you as micro-cap, small-cap companies are looking to get access to. Now, what does that mean? Everything from Robinhood straight through to CalPERS, Teachers, OMERS in Canada have access to our markets. Access. That's hallmark number one of national tier one senior mainboard stock exchanges. And that's because the issuers that choose to list with us adhere to that higher standard, that more, accelerated financial reporting deadline, good governance, good controls. You're registered in all the appropriate ways we as an exchange and appropriately the regulators would expect of you. With that comes access. Think about it another way. As you grow, as you scale up your business, your plans inevitably start looking for institutional investors. So everybody here probably getting a lot of these really interesting deals started. You want to get into an index. That's a senior exchange discussion only. So as you grow, graduate, scale, getting on this senior market becomes an important part of your future. In Canada, where we are, 13.5% market share across our exchanges today. This stat's 2 months old, coming up on 15%. So that number continues to grow. And today, I'd expect to see that number continue growing for the next couple of quarters. When you look at Europe, we are the largest market 9 months running. That means everybody has access, everybody can see us. We are a very liquid European market, and a lot of things that stand behind that to make it happen. Australia is the fun one. There's only really us and the ASX, and we are competing aggressively in that market for trading activity. Trading is the core of any stock exchange. Starts there, you sell your data, and then this room, CEOs, management teams, everybody who's presenting at this conference becomes a part of our ecosystem. We list them, and the cycle continues. That is the exchange business. You can see on the right kind of that progression of listings through acquisitions, through new business that we've listed, some of our partners in room with us today, and continuing to see that grow despite market conditions maybe not being as fine as they used to be 2 years ago. But what I really wanted to talk to you about around innovation, the idea of doing things differently, challenging the status quo in markets. Things don't have to be the same as they always were. You heard a few things from Joe this morning on ways we're thinking about our rules, how we implement them, how we interpret them, how we work with our companies to make sure that they can get a deal done in market. The one I want to spend a few moments on is the idea of intra-listing. I think you've all heard of inter-listing before. The idea that you work with 2 stock exchanges, basically you have 4 regulators, the appropriate securities commission, and a marketplace on each side of the border to approve, review, accept your transactions. It's a lot of work. So innovation, remember the definition. I want to make things more efficient, reduce energy. Well, wouldn't it be nice if you could have one exchange on every border that you as a company are raising capital on? So Canada and the US ready to go. We already have our first intra-listing due out to market. They will have CBOE brand on both Canada and US border, and they will join our own public company stock, CBOE, listed on our own exchange. 16 billion market cap global exchange operator as issuer number 2. From there, with partners, lawyers, bankers, IR firms, audit teams, and aspiring public company management teams, we will grow that number more aggressively than I think we ever could in Canada at the same pace. It's more appetite, more ecosystem, more bankers to have fun with and raise capital for companies. So intra-listing, something you're going to see more from us on. Innovation number 2 that we're really excited for, and I think this is our moat to play with for a very long time. I'm going to go back for a quick second to the pie charts because I want to just really hit home on this. In the US, you've got 3 mainboard markets. You heard it from Joe this morning. NYSE, NASDAQ, CBOE, getting listings going. Canada, you've got 4 recognized markets: TSX, Venture, CSE, ourselves. Australia, it's us and the ASX. Europe, you have the opposite problem. There are too many marketplaces, very fragmented, very difficult to navigate. So say you're a mining company. Canada, home base. Australia is probably interesting at this time of day. Wouldn't it be great? One marketplace to run that border with. Manage your deals, announcements, disclosures. That's our ambition. Biotech, Europe, US, Europe, Canada, grow, scale. We want to be a part of that pathway. But for Canadians, if you're here already, getting to the US is likely your next logical step to grow, expand access to capital. But you want to keep your shareholders happy. You've been here raising capital from Canadians for a long time. Leaving the country while it happens, maybe not your first motivation. So we're taking another step. This is what we're used to. When companies go public in the US, leave Canada, leave Europe, leave Australia to come here, inevitably you force all of your investors to find a way to open a US bank account and trade, because inevitably it's difficult. You can work around it. OTC markets in Europe, Frankfurt, Berlin, maybe affect a dual listing in Canada if this is home base. That makes sense. But it's a lot of work for investors. And pre-pandemic, I'd say that we're all game to go through a little bit of head bashing and try and figure out how do we open up these accounts, make the business move, get access to these opportunities. But if there's one thing that the pandemic has taught our business, it's about convenience. It's about being able to reduce the time to do something, because inevitably we're all busy. The moment you start something, you can't do it in a couple minutes. You got to come back to it. And sometimes you forget or you just don't. So for an investor trying to find your stock, not only in your own country, wouldn't it be nice if we could find a way to use the equities markets we own and operate to open up international liquidity in a way that no other stock exchange operator can? So what do I mean by that? NYSE owns the US. They're New York headquartered. Where else does NYSE operate? Well, they used to have plays in Europe, but with Euronext separate from them now, not anymore. NASDAQ has the Nordics and the US, nowhere else. CBOE is uniquely positioned as the second, in a few cases third, or if not the largest provider in a number of countries of interest to companies and to investors. So for us, we're thinking differently. We want to take Toronto, Chicago, London, UK, Amsterdam, and Australia as our first movers for what we intend to be the opportunity for international investors to finally get something more convenient for them. And what do I mean by that? Instead of bringing millions of investors to the US, we're going to bring the companies out to our marketplaces so that you, as a Canadian listed company or potentially US listed company, when you list with CBOE anywhere in the world, you will get your stock traded in pound sterling in the UK. You will get your stock traded in euros on our Amsterdam market. You will get your stock in Aussie dollars early next year. And the intent, we have market makers, global liquidity providers, all these partners who ultimately understand the plumbing that is an exchange. Why would we make the investors figure that out? Let us use the expertise we have, bring your stock to the rest of the world, and finally make it convenient for investors to find you in the currency they make a dollar from every day while earning a living. Now, to prove it, we actually have a very interesting use case in Canada. Another quick show of hands. Who's heard of Canadian Depositary Receipts, or CDRs? Got a few hands. Good. Good. I love it. They are backed by one of Canada's largest banks, CIBC. They are, for those folks less familiar with the product, there's 41 of them today that are bringing US companies to Canada in Canadian dollars, fractional shares with a hedge. So you think about it, you want to buy Tesla stock a year ago before they split, you needed $1,000 US. It's actually two trades. You own the FX risk and you own the stock. 6 months ago, maybe not the trade. Now, it's going to be really interesting to actually have that position hedged out and only own the company, not the currency trade. They've raised $2.8 billion in 18 months from retail investors who are trying to buy a US stock in a more efficient way because as Canadians, I think you can all vouch for it, we all have Canadian dollar accounts, we all have US dollar accounts, but we may not have money in the US dollar account. So using the money you earn, Canadian dollars, buying the rest of the world. Today, only US companies, but mission and vision is to bring other parts of the world into Canada so that Canadians can buy stock in the currency they earn a living in. That same principle is going to hold true for our secondary liquidity capabilities for our listed public companies. So as a company, you think about where your shareholders are coming from Europe, we will be able to make your stock available in euros on CBOE's European markets the day you list with us anywhere around the world. That is mission number one for us for the next 2 to 5 years. I didn't talk about Tokyo. We own an exchange in Japan, hopefully 2025. So when you think about where the world is moving, where investors are, we want to be local for them, make their life easy. Where do we want to be? We want to have this constellation, this network effect where we can support trading activity in our companies 24/5. As companies are prepared to do that, it's your choice when you list with us, but we want to have that capability, that network ready for you. And that's where I think we're going to be different from everybody else that's in our space today. Where else do we help our companies stand out? So getting public is battle number one. Surviving it's probably the hard part, especially in these markets. And I'm sure it's no surprise to any of you, you're here. You've got to market your business. Stock is sold, not bought. That's where we change the picture. We give you certainty on pathway to market. Joe from Lukowski Brookman mentioned this morning. It is about being transparent, straightforward to work with as an exchange operator, know our role. We're there as a regulator. We do what we need to do. The commission has their job. We do our absolute best not to overlap and ask the same questions twice. We want to be having those conversations together so that we can get you as a company to the finish line. Once you're public, that is the beginning of a lot of fun. And that's where also exchanges need to do more. It is about how do we bring intelligence, information, data to the hands of our public companies so that they can actually understand what's going on in capital markets. Now, there are problems everywhere. Shorting is one of those hot topics for the moment. There was a comment letter out from our Ontario Securities Commission back in March. If you haven't read it, it is worth a read. And you should have responded and written in if you're a company on the topic as well, because it's something we all have a role to play in changing in these markets. For us, supporting our companies is priority number one once you're listed. Data, regulatory support, guidance, straightforward pathway. You want to do a deal? Great. Have a quick phone call. Yes, this is where we're going. Good, finished. We don't like surprises. There's nothing worse than having a deal go through and somebody saying at the end, oh, you missed this, or no, this doesn't work for us. So if you don't have pathway to get a deal done, ask. We'll help. The team at CBOE Canada and our global markets team are staffed by lawyers. You're not working with business analysts and, pardon the term, box checkers. You are working with a team of people who know the rules, who are creative within it, and will keep you on side both ours and security legislation to make sure that you can execute and keep running your business. So for us, that is priority number two after you're listed. Keep it going. Show you the tools, things that are beneficial for your business, who's buying, who's selling. Sometimes, sad to say it, there's just more sellers than buyers. And finding new buyers is the mission. You have to deliver as a management team on that business. We'll be there side by side to help and make sure that we share everything we can with you. But what you'll see more from us, and I'll pause for a few questions, is listing with purpose. We want to work with global companies that can benefit from the network of exchanges we've put together. We're building a brand around the purpose-driven innovation economy. It's companies that are global, innovative, disruptive, change makers in their own segments, industries, and business units. And for us, that is where we're going to spend all of our time, energy, and effort as a business unit. We want to see that succeed. Canada, the US, working our way through Europe and Australia, more to come. This is the beginning. We're also thinking forward about our own business. How else do we disrupt something that has been built, established, and is ready to go? We also own tokenized markets, which are looking, and today trade spot crypto, but in the future, as wealth transitions out of traditional finance rails, we see a pathway for that business to be our future longer term. So these are the kinds of things that a 1,600 person global company can now deliver upon and start putting the building blocks together. This is CBOE, and I think the key part and key message from our end, it's time to ask for more. That's more connectivity, more access to markets, more intelligence, more information from your exchanges. And the CBOE team and I absolutely here to deliver. With 2 minutes to go, maybe three, I got three. I've got a little bit of time for questions if there are some. And pause for the microphone if you don't mind.
So getting into the wickets, if a company is listed across the board on all the exchanges, what's their principal location for things to be released like news? Second part, if you're dealing with Europe, most of the other exchanges are mostly English, but when you start to have foreign information, how do you, what's the solution?
How do you manage?
Yeah.
So I'll break your answer, or the first question, down into two parts. If you are listed in Canada, as an example, your principal regulator obviously remains here, OSC, BCSC, Alberta, pick your province, and our marketplace. If you look back at this slide here, and we're really talking about making the stock available for trading, we're not raising capital in foreign countries. That is strictly a Canadian regulatory regime. That is it. Same if you're listed only in the US, but we trade you everywhere else. Your principal regulator remains the SEC and our US exchange. If you're dual listed, usually one of those two regulators is going to put their hand up and say, I'm watching you, and that's likely going to be the SEC. Our US exchange will watch, our Canadian exchange will support, but as you go to raise capital in Canada, the Canadian regulators and our Canadian business unit will be primary on a deal review. That's where having one exchange in the middle is going to be very helpful instead of having two marketplaces fight over your business. Now, do I think there's appetite, need for a company to be primarily listed and raising capital in 5 countries? It's been a limited block of companies that would want to undertake that. I can see pairings, and depending on the business unit or the industry, some pairings make more sense than others. Do I think a company is going to intra-list on all 5 exchanges? Problem for another day. Second question was around translation. So that one's fun. If you're primarily listed in 2 countries, you've got to respect both sets of rules. We are working to create regulatory equivalents both for our own marketplaces and with the regulators to make sure that disclosure done in one country will be sufficient, respected in another. That'll help keep it more efficient from a process and procedures perspective. We're not there yet. In Canada and the US, we have MJDS to manage most of our headaches. Europe doesn't have that concept yet, but it's something that, as really the only exchange operator with interests in other countries, it's a conversation we're having now. I think we have time for one more question. So the question was, for benefit, how are you dealing with the arbitrage of currency across each market? Answer's fun. At the end of it, this happens already every day. The world's largest market makers, Virtue, Citadel, they're already in your stock if you're on OTC and a Canadian market. They will continue to be there in every country we operate. When you think about our market share, you think about our people, our relationships, our capabilities in every country, they're already asking us when our companies are going to show up in other markets that they can run an FX arb for. So that's the difference between being a recognized exchange and being a quotation board. When you're a recognized exchange, there are rules on how orders match where that arbitrage can be more effectively maintained. And they can quote and manage the FX risk through the day and keep it tight. An OTC market, whether it's Frankfurt, Berlin in Europe or OTC in the US, does not guarantee you an execution inside of traditional trading quotes that you'd see in Canada. And that's why we're focused on using our exchange platforms for this and not standing up a bulletin board type quotation system to run the business. More to come for sure. Knowing I am right on time. One more question? Yeah, go for it. Conversation is in progress. Yeah. Thank you. When are Chess and DTC actually going to chat with one another so you can settle stock into Australia? Again, think about who's motivated to do this, right? Everybody's protecting their own kingdom. They own their own markets. They operate where they do. We're the only one who wants to see this triangle actually move. So those conversations needed for us. We own clearinghouses globally, but we don't own DTC. We don't own Chess. We don't own CDS in Canada. We own a few in Europe. That for us is the core underpinning of this entire business. There are a few other ways to get deals done into Australia, but it'd be great if interoperability were there, or we find a way to get it done outside the system. But that's what's on the radar right now, which is why Australia is a first half of next year exercise and not a now exercise, unfortunately. But we'll keep you posted on that. Perfect. Then I think we are Canada, US ready to go now, Europe ready to go now, Australia's first half of next year. And then we should be all set. Brilliant. Well, I appreciate the questions. Thank you all for the time. And Mike and a few others in the room from CBOE, fire away, ask anytime.